Hello, everyone. Uh, Today we'll do a quick video on a stock named Thirumalai Chemicals. It's a portfolio stock for me, with significant percentage of my portfolio allocated to this chemical company. I've been holding it for quite a decent amount of time, maybe a couple of years now. So I thought it'll be a good time to do an update on this stock. So before we move on to the charts, I thought I will share an interesting fact, which was a surprise for me as well. So Thirumalai Chemicals, looking at what it has done over a longish period of time, it's very surprising to me that if you look at their 10-year, 5-year, and 3-year performance, it's quite decent numbers, I must say. So the sales growth, okay, 10 years has been a bit below par, but 5 years and 3 years have been quite decent. Profit growth has been exceptional for 10 years. 5 years being 32%, 3 years being 35%. And the stock price return, even though this is a commodity chemicals company, the stock price has done phenomenally well. And what is also surprising is, for a commodity chemical company, the return metrics, the return equity is very healthy for almost all time periods. So this basically tells us that certain commodity companies can have their cycles, but still, if you average their returns, whether it's stock market returns or return metrics, they all seem to be healthy for this company. And this company has some decent plans for capital outlay and expansion. So it's very interestingly poised as of today. What is also interesting is all these stock returns have come at earnings growth only. So if you look at the PE multiple of the stock is around 9 times earnings, which is not spectacular. And you look at the PE ratios of this the PE ratio chart of the stock, uh, it's never really expanded much in PE ratios. So most of the stock returns are based out of pure earnings, so which is still healthy. So you don't expect a commodity chemical company to command a big PE multiple or a EV to EBITDA multiple, but it's still worthwhile to have in mind that this is not returns based on a PE expansion, rather stock market returns. Rather, sorry, earnings growth return. So now going back to the chart, so where we are positioned now. So this is a daily chart of Tirumalai, and I have just one strategy that's running on this, which is the golden cross strategy, which is a very simple strategy of the 50 to 200-day moving average cross. So it's still valid, the golden cross. It gave us a long position at around 60. We entered here at 60, and the long position is still valid because the golden cross or the death cross hasn't happened yet. So that's still good news from a long term perspective. In terms of where how the stock is looking, um, it had a very good move up to around 330, and it was quite non-stop. It had some consolidations in the middle, but it had quite a rally from 150 to 330. It doubled in a very very short span, and since then the stock has been correcting and consolidating. So it came down all the way to 200, went back up 270, then did uh, come back to 190. You could look at this as an ABC correction. This is the A correction, this is the B impulse move, and then the C correction, finally taking it below B. And then I probably expected that a new rally would begin from 190. It did. It was quite strong with decent volumes, went up to 320. Then I think the overall market sentiments dragged it down back to 200. Yeah, to 218. So again, if you look at this particular um, small impulse wave, it's gone up from 190 to 320. It's corrected A, B, and C, and I think there's a decent chance that we may see a rally from here. Um, my hope is that it does take it past the all-time high and goes much higher, of course. But as we have all seen, we all can be terribly long. Um, in terms of supports, I think it's very evident these two are support, but I would go just say this is the major support here at between 215 and 217, right? And on that support, it's seeming to form a head and shoulders on it, and it's reversed. Zooming in on the chart a bit more. So if I look at the last 6 months chart, um, hide the strategy. Yeah, you can see that the important resistance here is 256, and I think it should take that out uh, soon. And once that takes it out, then it's anybody's guess on how much it will rally from there. So that's a short video on Thirumalai. Um, the the overall long-term view is still bullish. The company's last quarter result was pretty decent. It did a year-on-year massive revenue growth. The margins contracted mainly because March 2021 was a blowout quarter for them for both Thirumalai and IGPL. The spreads were unsustainable between PAN and orthoxylene. So this can never be a representative quarter. But yeah, looking at what IGPL has done and what Thirumalai has done substantially better. Of course, I expected a bit better on the dividend front, but it's fine. They're investing between 500 to 1000 crores going forward. So I think they need the money. So overall, all looking good. I would still wait for the stock to take out first 256, then it should take out 280, and then all time high. Okay, thank you.